Hey, join our Lifestyle Focused Wealth community. Membership starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. How about that? How about that? We made it back. We made it back. Some technical difficulties there. Hopefully you can still hear me. But if we cannot hear me, put me back on and let me know. I know my community out there has got my back, so they'll let me know if I can be heard or not. Is that a thumbs up or thumbs down? Fantastic. Let me take a break and then let's see if we can get this thing going all so that everybody can see what's happening. Because we don't want you to miss out. We really don't. We don't want you to miss out because we got great information for you today. I mean it. We got great information for you today. Exactly. Exactly. All right, I think we got it fixed now. I think we're up and going. Thank you for joining us. This is Lifestyle Focused Wealth. I'm Ronco Johnson, keeping you company. I know that you missed the first part of it, but today we're going to be talking about loan interest versus income tax, the rich versus the poor, And I'm going to be talking about the absolute truth. That's right, the absolute truth. We want the absolute truth about what's going on. You know, why is it? Why is it that we notice that there's a difference between how the wealthy handle it and someone who doesn't make as much income? You know, we could be talking about the very same product. We could be talking about the very same absolute product and information, and we'll find that they all treat things differently, right? Well, I think I got an answer for you. I think I got an answer for you because today I want to share this detail with you from the beginning. This statistic got me a little shook up when I realized that the wealthiest of Americans often pay lower effective tax rates than the bottom 50% of America. And then on top of it, low-income borrowers, they can face interest rates on loans that are almost or up to 10 times higher than individuals with high income. 10 times higher. Well, if you make a little money and your interest rates are 10 times higher, you're probably never going to catch up. You probably can't catch up. You probably are never going to catch up, right? So there is just some simple fundamentals that we're going to talk to you about the relationship when it comes to understanding how these products work, how these loan interests work, and how does this income tax work. What's the difference? The rich versus the poor, the absolute truth, right? We're going to be talking about that today. So guess what? Welcome back to When the Lights Go Out. Are you ready? And we're going to be talking about how you having the understanding of the dynamics of this episode, the dynamics of loan interest versus income tax, how it affects you, how it can help individuals in your family, how it helps your legacy as we move forward. But all you had to do was be informed. Be informed of the financial opportunities, the financial education, the financial literacy that's out here. Because this information that we're going to share today will affect how you make your decisions. And it optimizes your economic well-being all at the same time. So do me a favor, don't forget, put in the takeaways, like, subscribe, share, go ahead and smash that thumbs up. And don't forget to hit the notification bell so you can get content in the future that makes sense. We want you to go ahead and join our lifestyle focused wealth community at $16 a month when you pay it annually. You want to be on the inside of this information. You want to be there because we got 3 parts that we're going to share with you on this topic. It gets deep. We're going to dive deep into it today. Yes, ma'am. We're diving deep into it. But before we get started, I also want to encourage you to sign up below in the descriptions and receive our emails. Receive our email information. All the good stuff that we're doing, art, travel, recipes, and much, much more is absolutely free if you're on the emailing list. So, be a part of our lifestyle focus mailing list. Get something in a secret gift from me to you in your outbox twice a week, twice a month. And hopefully you can enjoy that and share it with your friends. So let's talk about loan interest. What is a loan interest? It's the cost of borrowing money that's typically expressed in percentages of the amount of money that you borrow. Now, this affects everybody. It doesn't matter who you are. Whether it's personal, educational, or for business purposes, the loan interest is the loan interest. It will give you the loan. Right? Well, let's talk about the wealthy. How does those wealthy see this loan? Yes, we're going to get right into this because this is what we're all about here at Lifestyle Focused Wealth. We're talking about what millionaires and billionaires do and how they see things. And once you start to see it, maybe how they see it, it may start to reshape how you think about your finances. Well, it's simple. The wealthy see it like this. Loans can be a strategic tool for leveraging investments and growing their wealth. Well, what do you mean by that? You know, if you could take a loan and invest it in a different way and continuously see your wealth going up, right? The wealthy understand a few things. If you're a high income earner out there, your loans and your financial investments, by taking advantage of low interest rates and maximizing returns, you can employ some tax strategies that will reduce your taxable income. And if you don't know nothing about that, what I'm talking about is investing in tax advantaged accounts, utilizing deductions and credits. Absolutely. Absolutely. So if the wealthy are doing it, what exactly is the poor doing? You know, the poor, this kind of hits me in the right place because I came from humble beginnings, middle class family, but the rest of my family may not be that way. And this kind of hit home when I started to have doing my research on this conversation. The difference between people who make the lower income is the fact that they rely on these loans for the essentials that they get. They're relying on them. They're living off of it. These essential loans, this money on this essential loan that we're speaking of, that's the difference between someone paying a mortgage or paying their rent. You know, but the higher the interest rates can be, it can cause a significant financial strain on that family. So I need you to stop and think about that for a second. The name of the program is When the Lights Go Out, Are You Ready? And we're having a lights out moment. If the wealthy can understand that they're leveraging the ability to use these loans, and our lower income earners are living off of these loans, we're having two different conversations. Our lower income folks, they may not have access to the same tax planning resources that the wealthy do. That results in a higher effective tax rate on their limited income. I need you to understand, we're here in the United States. We want to be, it's amazing to me that we want to be the most powerful country in the world. But at times it feels like we're not trying to feed the majority of the people who live here. Which is interesting. To me, I just don't quite get it. I just don't quite get it. So, what we're talking about, the economic divide and the wealth gap, I can understand why certain economies of scale are screaming at the top of their lungs for help. They're screaming at the top of their lungs for help. Why? Why? Let's talk about it. Income tax. What is income tax? By definition, income tax is nothing more than a government levy on your individual and business earnings. I think once we start to understand what we have in front of us, then we won't be as intimidated to talk about what income tax really is. It's kind of a progressive tax, meaning that those with higher incomes pay higher taxes for their earnings. But there's a but there. The difference of how it impacts the wealthy is because the wealthy have access to tax planning strategies that often can minimize their tax burden. So when we're talking about that, those with lower incomes may find it very difficult because they don't have access to the resources. And they're being taxed on the very little that they get. And I think that's what you're seeing in politics right now is, how there's a disproportionate value system for the middle class and the upper and the high end, the wealthy, or we want to call them the wealthy, if that's what we just shoot it straight. And, so in this particular video, I find it interesting that if we're going to understand how it affects these different groups, we want to know, how does loan interest affect the wealthy? If they're going to change everything to benefit the wealthy, it's probably time for us to start thinking like wealthy people. It's time to start thinking like wealthy people. The secret's out. The internet is available. Lifestyle-focused wealth in the community are inviting you in. Because this is the kind of information that you want to know. This is the kind of information that you're going to get. When you understand how does a loan interest rate affect the wealthy, well, high-income individuals, they often use these loans to finance their investments. They're taking advantage of low interest rates and maximizing the return on those investments. They also employ these strategies to reduce their tax liability, their taxable income. Because as they're putting their money into investment vehicles and investing in these tax advantage accounts, they're utilizing the tax deductions and the credits from their income. I hope you guys are getting it today. I hope you're getting it today. So let's talk about an example. That example is very simple. If they're in the wealthier group and they decided to use these dollars, let's say you earned a 5% interest rate on a loan on $10,000. That means annually you will owe $500. Well, that $500, in many cases, that interest that was earned on that investment is tax deductible from your income. So that $500 is now subtracted from what you made as your income. So if you made $40,000, $500 subtracted from it means you made a little less. But why is that significant? Because that little bit of a $500 bump down could change your tax rate. It could change your marginal tax bracket. And when it changes your marginal tax bracket, it changes the whole landscape of things. You could have been in a 30% tax bracket. Now you're in a 22% tax bracket. Or you could be in a 22% tax bracket. Now you're in a 12% tax bracket, because you understand that whatever interest that you're earning, you're going to use it to minimize your income. Well, let's talk about how the wealthy, we talked about how the wealthy see it, but how does it affect low income earners? How does that affect our low income earners? I can tell you how. Low income earners rely on loans. But because these interest rates are so high, it leads to a financial strain on their lifestyles. In addition, they don't have access to tax planning. They don't have access to financial advisors. They don't have access, which results into having a significant effect on their tax rate, that on the income that they already are struggling to make. Ladies and gentlemen, we got to start thinking about it. As I'm doing this live today, you have to forgive me, because I'm starting to see it, and I start to think about some of the folks that have been on this broadcast. And I want to make sure that we understand that my heart is with the people too. I don't believe this is the day that we got to stop saying that we didn't know. We got to stop saying nobody told us. We need to be putting our butts in our seats and having this information. It didn't cost you anything. All we need you to do is to be in the room. That's all we need you to do, is to be in the room. And if you have families that are lower income earners, grab them up. Bring them. Tell them to log on. They need to be in the room. Why? Because they're suffering. They're having to pay more taxes on much, much smaller amounts of income. But we can do something about that. See, here at Lifestyle Focused Wealth, we're providing strategies. We're providing solutions. We're giving strategies, concepts, and solutions that you can use today. It's not limited to just wealthy people. This is key information. When it comes to income tax, we just got to understand how it works. A lot of us are looking for tax returns. So here's some key considerations that I want you to think about. These are 3 considerations that I want you to think about as it pertains to loan interest versus income tax. In many ways, interest rates, they fluctuate, okay? And this fluctuation, it can affect your borrowing costs and your investment returns, depending on who you are. Okay? But can you see how that would affect your financial decision making? The way you process and the way you think? If it affects you in a negative way, you're probably not going to want to use those loans. And if you don't use those loans, you're probably going to pay for it in the taxes. Number two, the tax policies. You know, there can be changes in laws that can impact disposable income and then give you the ability to save and invest just like the wealthy do. There's a difference of how it may affect you based on what economic group you're in, but you still have the opportunity. You're given the opportunity because we're looking at it and saying, hey, look, we can put some of this stuff in the policy. In the policy, I mean tax policies that can help those individuals out in middle America or our middle income or lower income earning folks to start to understand and have the education of how this can affect them and how they can better use this resource. Number three is simple. It's financial education. You hear me say it on this broadcast many of times. Financial literacy, financial education, and financial intelligence, to me, all different. This is a case of financial literacy. And that's understanding the interplay between loan interest and income tax and how it can empower an individual to make better financial decisions. And it doesn't matter what income level that they're in, right? It doesn't matter. See, by us doing this simple examination on how loans work and the income tax, how it affects both the rich and the poor, we can gain insight. We can gain insight on a broader economic trends of how it works. The importance of financial education is prompting economic equity. Financial literacy and financial education, you won't fall for the hokey doke anymore. You won't. You will start to understand the value of equity. What we're talking about is closing the wealth gap of information. Literacy is the key. Literacy is the key, right? And if you're not sure how that helps, do me a favor. Feel free to ask. Feel free to ask. Don't sit out there and feel like you got to know it all. Don't do that. Don't do that. You're the person that needs to be hitting our button below and sign up for a coaching session. It doesn't cost you anything. Let me be part of a solution for you. I know I'm moving along pretty fast today, but I want to talk about the pivotal understanding of today. I want to highlight some of these things because in highlighting them, we can understand and have a better understanding of how we're different. That way, when I move on to part 2 and part 3 of this segment in the upcoming episodes, you'll be able to follow along. Our main insight of systemic advantages that the wealthy have over poor people is understanding how to manage these loans and their tax obligations. See, it lies in the access and resources, financial strategies that can significantly reduce their taxes or your cost or your tax liability. This comes from financial education. This disparity that we're speaking of, it creates a pivotal moment of understanding, but about economic inequality and inequity. Because if you don't have the understanding, you're not part of the solution. You're in the treadmill. You're the hamster on the wheel. You're continuously running and you're chasing the cheese. I want to share with you some of the systemic advantages of the wealthy as I'm talking to you here. One that comes to mind right off the top is having access to lower interest rates. See, wealthy individuals who have better credit scores, they have more collateral, which allows them to secure loans at a lower interest rate. And for example, they can leverage assets like real estate and investments and obtain favorable interest rates or favorable terms on HELOCs for their homes or margins on their loans. And for those, so I don't talk over you, HELOC, a home equity line of credit on your house, margin loans are on your brokerage account. You can take loans from those too. So those are different types of loans that we're going to be talking to you in upcoming episodes, the differences of how cash value loans, HELOC loans, margin loans, these are loans that typically are lower than unsecured lines of credit or loans that we don't talk about, that the wealthy use all the time. So you want to stay tuned for that episode. Number 2, tax deduction opportunities. The rich, they have opportunities to take advantage of the tax advantages of deductions of credit. They can deduct interest on their mortgages, the HELOCs that they use on their homes. And if you were to use a HELOC or a home equity line of credit for home improvement purposes, and if you were to use margin loans on your investment, you can see how you can significantly reduce your taxable income. Why? Because these are large purchases with a lot of interest on them. So if you're getting $10,000, $20,000, $30,000 back in interest payments that you paid out in interest payments that you're getting back off your taxable income, it's major. Let me correct myself on that so that I'm very clear. If I had a HELOC that I had paid, say, $20,000 of interest on over the course of the last 12 months, and I'm able to deduct that from my income, let's just say a person made $100,000 a year, and they're able to take off 20 there, and it make me $80,000. This is why real estate is so valuable. If you have a margin account with your brokerage house, it's important to understand that margin accounts are nothing but loans that the brokerage allows you to take against your collateral, your stock. The interest rates that you pay on that margin, in many cases, are tax deductible. Again, if you made $20,000 of interest payments over the last 12 months, you could potentially see that deduction of income off your taxes. Am I making sense to you guys out there? I'm looking. I see you out there, Miss Leela. If you have questions, go ahead and ask. And just so I can get to you quicker, don't forget to put takeaways. I want to make sure that I'm not losing you on this. Yes, I know we're going over just a little bit today, but I want to make sure that you, the middle class, have an opportunity to do what millionaires and billionaires are doing. They're not smarter than you. They just have more resources. But you need to know that the resources are available to you. And a wise one that uses the resources starts to have this moment of understanding that we're talking about. So number 3, this is the number 3 thing. Financial planning and advisory services. The wealthy can afford to use it. The wealthy can afford to sit down with someone like myself and others, tax advantage, and talk about tax advantages with their advisors, their tax professionals, their financial planners. These are the people who help them optimize their financial strategies. These are experts that can help identify the best way to minimize your tax liabilities and manage your debt more effectively. It's amazing to me, even as an advisor, when we sit with someone that's higher, they're more inclined to be receptive to the information because they're trying to reduce their tax. But when we're talking to someone that has a lower income, comes from a lower income, or has a lower income mindset, they're trying to discount or ask for a discount on the service that's going to give you the ultimate discount. You need these professionals in your life. You need it. Okay? Number 4, investment leverage. Wealthy people can borrow funds. I've said it before. They can borrow, they use borrowed funds to invest in high return opportunities. They don't go out and buy a TV, per se. They don't go out and buy a new pair of shoes, per se. And I know you can use a TV as an investment, and I know you can use shoes as an investment to some of my millennials out there. But the wealthy, they use their funds to invest in high return opportunities, which increases their wealth tremendously. For instance, they might use a margin loan to buy additional securities. Benefiting them from both, they're benefiting from both the increasing value and deducting the interest from their taxes. Meanwhile, someone that is in a lower income bracket or an individual who makes a lower income takes out a high interest rate personal loan for emergency expenses and has no tax benefits and a higher financial burden on their lifestyle. For me, this disparity, I tell you, it highlights the systematic advantages that I think perpetuate economic inequality. But if you can understand these dynamics, it's very simple. If you can start to understand these dynamics, you can make better choices. We can advocate for better policy. We can participate and promote financial education and give more access to this information for everybody. Again, if you have questions, feel free to do one thing. Ask. Just ask the question. If you ask the question, you might get the answer. And if you ask multiple questions, you'll see the daisy chain of success start to happen. And once that daisy chain of success starts to happen for you, that's the pathway. That's the pathway to this understanding. And that pivotal moment that we're talking about, understanding financial education, we recognize that these advantages are not just for those who have a lot more money, but it's about having access to tools and the knowledge so you can multiply your wealth and reduce your financial burden. This creates a cycle. This is how the rich get richer. It's not merely because they have more money, but it's because they have more resources and they use it more effectively. So let me give you an example. Consider this. You have two individuals, one wealthy and one with lower income. The wealthy individual, he takes out a HELOC or a home equity line of credit at a low interest rate to renovate his new home. What does he get? He increases the value of his property while deducting the interest from their taxes. Meanwhile, the lower income person, like I said earlier, is taking out a different loan. He's using it as an emergency fund. There's no tax benefits to it. He's created a financial burden for himself and his family. We got to do better. I'm an advocate for these policies and these practices to promote financial literacy. And those that are a part of our lifestyle focused wealth community, you are too. You may just not know it. So as you're giving this information and you're sharing it with family and friends, and you're helping them get to a point, and you're bringing them up, and we're upgrading you. You'll understand when you take out a loan and you agree to repay the principal plus interest over a specified period of time. That interest, it could be a fixed rate. It could be a variable rate. But once again, in the example that I gave earlier, if you borrow $10,000 and your APR is 5% in a year, and then you pay $500 in interest, making your total $10,500, that's how that works. But I know that I'm going to be able to deduct that $500. So in our upcoming videos, we're going to be talking about loans. We're going to be talking about the other types of loans out there. The personal loans, the mortgage loans, student loans, auto loans, business loans, and how it affects you. That's going to be our part 2. We're going to talk about some takeaways, the deductions of them, loan types, different loan types and interest rates and how they affect you. But then we're going to get to part 3, where we're really starting to talk about 3 types of loans that are lower than unsecured loans. that we don't talk about: cash value, HELOCs, margin accounts. These are the kind of loans that the wealthy are using and how they're leveraging them. When we get that information and give you that information, I believe you're going to have an epiphany. I think you're going to start wanting the financial products that we call tools. And then you're going to want the coaching, and then get some coaching and some advice from your financial professionals out there. And you'll start to see that tax season is probably more like Christmas, because there may not be any taxes for you to pay, because again, you followed the daisy chain of success. If that sounds like something that's good to you, do me a favor. Give us a comment. Give us a thank you. Don't forget to ask the question. And if you want to learn more about these financial tips, find me on lifestylefocuswealth.com. And I look forward to speaking to you. I really do. I really do. Because we want all of us to win, right? We want all of us to win. I want everybody to be able to take and the straw man. And I think it's a perfect segue into understanding taxes, because if you have your trust in place, you have your company in place, you have your banks in place, now we got to understand the tax game and how we can deduct. Okay? And then we need to know, what loans are we talking about, so that we're not afraid of credit card loans. We're not afraid of equity lines of credit or margin accounts, because we understand it. And the purpose is to leverage it for our benefit. Hey, but that's our time today. That's our time today. I'm Ronco Johnson, your Lifestyle Focused Wealth coach, and I look forward to talking to you more about these strategies to help you get to where you want to go. Because, the more we talk, family, the more we talk, the better we get. And the better we get, the more knowledge we gain, the more we can share. And the more we share, the more impact that we're having in our society. Building a life of significance is what's most important, at least to me. And I hope you share in that. And if this information has been good content for you, please do me a favor. Don't forget to like, subscribe, share, give us a thumbs up, and we'll see you every Friday at 1 o'clock, right here, same time, same place. This is Lifestyle Focused Wealth, Lifestyle Focused Friday. Hey, enjoy your weekends. Be safe out there. And don't forget to tell someone you love them. And be safe. Until next time, I'll see you then.